Hi, welcome to Urban Insights. I'm Jayashree Kurup. Today we're talking about a climate change that is very visible to every person on Earth. Hot summers, raging floods, and we're talking about how we can mitigate this. And mitigating this, there is a lot of funds available globally. And today we're talking to Dr. Kishore Nuthalapati. We're talking about where do these finances come from? How much finance do we actually need to counter climate change? And let's talk about the ins and outs of the entire scenario around climate change and the finance available. Thank you so much for joining us, Dr. Kishore.
Thank you, ma'am. Thank you for having me on your show. Yeah, I've been watching many of your interviews and find them very good because most of them touch upon the burning topics. Certainly, you have chosen the best topic, which is another burning topic today, not only for government, for people, for the whole of the world. Now, you asked me about the impact of the climate change, climate finance. Let me first put an abstract word. The financial impact of the climate change is very huge. How huge? It is so huge that we cannot accurately quantify it. But yet, there are certain approximate reliable numbers which are estimated and reported by international agencies, reputed international agencies, and they give a reference for us. What is the impact? For instance, World Economic Forum, which is the international NGO, and all of us participate once in a while. In fact, we had the privilege of participating in a couple of meetings this year also. It puts the number at $143 billion per annum between 2000 to 2019. That's for 20 years approximately. Now, the cumulative volume of the climate change impact is 2.8 trillion. So three-fourth of Indian GDP is that what it is if you're talking about climate change. And if you have to break it down to per hour, it's about $16.3 million per hour is the impact. This is very, very huge by any measure, as 16.3 million earning may not be possible in any country so easily because this number is very high. Now, these are the past numbers, what are estimated as per the observations, as per the empirical studies, etc. Now, there are projections which are also from the same reputed agencies. They say that the global cost of climate change is would be something like 1.7 trillion, 1.7 trillion to 3.1 trillion dollars by year 2050. What is this 2050 year? We have two thresholds, one year 2050, another 2100. These are the years which we chose as benchmark years to attain certain targets of climate change. Now, by 2050, if 3.1 trillion would be the impact of climate change, we can imagine what it could be for the life, for the earth. And now, what is the loss of this global GDP because of this climate change? That also is very important, because when you say financial impact, it again boils down to what is the loss in terms of GDP to the extent it could be quantified. It's at 3%. So 3% is the loss of the global GDP solely because of climate change. This is what we are talking about.
So, where does the finance? There are two aspects to this. One is mitigation. The second one is, reducing and bringing it down to the 1.5 degree level. So, let's talk about that 1.5 degree first. What is it, and what kind of finance do we need to keep it at those levels?
As I just now spoke, there are two thresholds for us. One year 2050, another year 2100. This 1.5 degrees Celsius is a scientifically arrived at number what the world believes that if you can achieve that, the climate change will result in global temperature rise not beyond 1.5 degrees Celsius only, above the pre-industrial levels. The pre-industrial levels are referred to year 1900 ish, 1900, 1910, etc. So those years, what was the climate change, what was the climate level, and from then the warming should not rise above 1.5 degree as of now until 2100. This is the threshold what everyone is speaking about, or the globally arrived at consensus threshold. This is agreed upon by all the countries in the COPs, the conference of parties, and therefore this became a agreed upon target. The COP 2015, which is the conference of parties of all the governments held in Paris in year 2015, has written this 1.5 degree as fixed and applicable for whole of the world. Now, every country has its own contribution and role to meet this target of 1.5. By the way, this is absorbed, rather adopted by the COP21 in the Intergovernmental Panel on Climate Change, which is again an intergovernmental body which is created with the participation of all the governments, all the countries, and which have studied what is the present impact, what it should be, what could be the impact that could be absorbed and could be withstood by the life on the earth. So it is so scientifically derived. By the way, they had the initial target at 2 degrees Celsius, but realized that it will not be too easy to achieve 2 degrees Celsius, which could be ideal, but the target is set at 1.5 degrees Celsius. Now, having briefed about this 1.5 degree Celsius, now coming to the second part of the question, what is the investment required to achieve this kind of target or the goal? The investment what's required to achieve 1.5 degrees Celsius only above the pre-industrial levels is about 44 trillion, almost 45% of global GDP as of now. And this 44 trillion is required by year 2030. So we are hardly 6 years away from now to spend, to mobilize and spend this 44 trillion by year 2030. By the way, who made this estimate? Yes, again, an international reputed agency termed as International Renewable Energy Agency, IRENA, which you are aware of. In fact, this required investment is also stated as a percent of GDP, because everything boils down to GDP. The contribution has to come from the sources which is measurable or comparable with the GDP. Now, let us speak about what it is for India, which is very relevant for us at the moment. For India alone, the required investment is 7% to 18% of India's GDP. This was estimated to be spent between 2016 to 2050 for about 35 years. But the actual amount what is spent is not even 10% of the actual estimate and required. Now, assuming that equal annual installments will be structured and we invest, then 2.8% of the GDP would be required every year going forward. 2.8% of GDP. This is, we are spending less than 10%, ma'am, actually. Less than 10% of actual required.
And when we talk about adaptation and mitigation, which one are we spending on right now, and how is it happening?
When it comes to the climate change, climate finance, we'll have to speak about two important aspects what you mentioned, because these capture the whole of the impact or the reference of climate change. One is mitigation, the other one is adaptation. Now, as you rightly mentioned, mitigation speaks about reducing the emissions and preventing the further warming, while adaptation addresses the current or the present, the immediate effects of the climate change to ensure resilience. Adaptation gives resilience so that you can withstand. Mitigation avoids the future climate impact, and it will condition the future possible further harm, further warming. But as it sounds and as we could understand logically, adaptation involves addressing, working on the current projects, either operational or under commissioning. Whereas mitigation speaks about new projects. It involves new projects, commissioning, development, etc. Naturally, it will be attractive to look at mitigation because you are spending everything right from the beginning and you can understand what is your return, what are the time horizons, etc., and you will be better placed. Whereas adaptation is a different strategy, is a different requirement, because it is already having some stable source of revenue or certain source of revenues. And as you have to invest more, you aren't sure whether this additional investment into adaptation measures will give you the required additional returns or not. The mitigation involves new projects with clean energy and root causes, etc. Whereas adaptation involves only modification, conversion, and brings temporary relief. As I said, resilience. It continues the life without addressing root causes.
Now we've got a lot of infrastructure. India is one of the largest countries where the maximum infrastructure development is happening. What is the impact of that huge amount of construction, both residential and infrastructure, on the climate change in the country?
Roughly $200 billion worth of assets are getting created from the sectors construction and real estate. $200 billion is getting created into the traditional assets, but the attention towards climate change impact, the ESG impact, is of recent origin only. The projects of either mitigation or adaptation can be best spoken only with reference to infra and real estate, because while infra could be a long spanning projects, few in number, real estate could be many projects. Each of them could be very of high value or low value. So as you rightly stressed upon the real estate word, it is the real estate which is a classic example to fit into both adaptation and mitigation. The India's adaptation costs are estimated to be 29-30 lakh rupees in year 2020, and by year 2030 they're expected to be something like 86 lakh crores. So 30 lakh crores to 86 lakh crores in a span of 10 years is the estimated cost what we have to incur on adaptation. But this is the estimation as required. Then as you ask me what is the actual invested amount, the actual invested amount is a pantry 37,000 crores in year 2020, and it is hardly 1.25% of the required amounts for the adaptation.
Where does this money come from? Who invests the climate finance?
Of course, it has to come from public and private, naturally. But what we have to understand is, while private and public both are equally important, the majority of the amount is coming from public sector. Let me give you a reference. Globally, the public sector is investing approximately about 70 billion annually, has been investing during the past 5 years, the current 5 years, $70 billion. And what's the amount private sector is investing? About 35 billion per annum. So 35 billion per annum from private and 70 billion dollars per annum from public. That's the difference. Now, both are falling short of their requirements. That's one aspect. The other equally concerning aspect, more concerning aspect, is this $35 billion investment from the private sector needs to be verified with the other investments. Let us term them as negative nature investments, because these investments are observed and stated as causing climate change. The climate change negative impact investments are $5 trillion by private sectors per annum. So now you could understand, of $5 trillion per annum negative nature investments, hardly $35 billion per annum is the investment by the private sector. So is the case with government. The public sector also is investing money on negative nature projects of about 1.7 trillion per annum, while it is investing hardly 70 billion per annum on the climate change, the climate finance investments, etc. On the whole, we could say cumulatively until now about 98% has come from cumulatively public sources, and a very minuscule amount from private sector. This is because the investments from the private sector are of recent origin, whereas public sector has been conscious, at least conscious, over a long period of time.
On climate finance, do you think that we have been investing in climate finance so much from the public sector over a period of time?
Yes, ma'am. They have been investing in the sense public sector has been embracing gradually over a long period of time. For example, in one of the discussions, as you also stated, the renewable energy focus is more from the public sector only. So the energy efficiency requirements are more from the public sector only. And in the most of the public sector projects, the additional capex is allotted to address the carbon footprint issue and these things, the fossil fuel issues, etc. Yeah.
Let's talk about the green bonds that are coming up. What are green bonds? Who invests in them? Who runs them? And what is the return out of green bonds?
Green bonds are like any other specific or special bonds, for example, like gold bonds. But green bonds are more important because they have a cause inbuilt into the very structure. And green bonds, as they sound, are meant to attract the socially responsible investors to commit the required funds while they still meet their commercial targets of achieving their returns and having their loan books or their investment books, etc. The process of green bonds need to be looked at to understand how that could give benefit to the sectors. First, they will be issued, then the projects which meet the requirements to receive the amount of green bonds deployment would be selected. Then these selected projects will be duly validated by a third party expect agency. Then the investment will flow into the projects. Thereafter, monitoring, impact reporting, then the governance structure of is it properly climate change friendly, climate friendly, nature friendly, non-negative nature, etc. All are ensured, and then the bond will be serviced. Now, coming to the return part, green bonds, as of now, do not enjoy any commercial attraction because they are not primarily enjoying concessional coupon. There is a bit of concession or the premium which is offered by the investors, which is in the colloquially called as greenium, green premium, greenium. The greenium as of now in India is about two basis points, but it is between 2 to 5 basis points, 0.05%, which is very paltry. In fact, it's not good enough to attract someone who could shift his traditional investments, his her traditional investments to green bond investments. But then that said, the requirement of having loan book towards green loan account towards green bonds, your mobilized sources and deploying sources has become one of the voluntarily adopted targets for many domestic lenders also. And we don't need to speak about the multilateral agencies which have made the climate finance as one of their important targets to mobilize funds and also to lend funds only for climate friendly projects.
You are in a company which actually constructs infrastructure, right? So let's talk about when you plan your projects or when you execute your projects to attract climate finance. Is there an extra effort to make sure that your projects go green?
So I come from, yeah, as you know, I represent BEKEM Infra, which is one of the niche leading infra and engineering companies in the country. We are India's largest hydro-mechanical engineering company with in-house designing, manufacturing, planning, logistics, construction, commissioning, and handing over capabilities. We are 30 years old. We have delivered 150 projects, and we are doing amazing job as far as climate impact is concerned. Within the projects what we are developing, for example, a couple of the PPP projects what we are doing now required the environmental and social due diligence to be undertaken. We worked closely with the lending agency, which is one of the leading lender in the country, and which is in turn also supported by IFC World Bank because of its cause of green funding, and we also enjoyed a bit of benign coupon on that. And this ESDD, environmental and social due diligence, helps us in understanding what are the aspects we need to focus upon and which areas will require attention to avoid further carbon footprint, or how do we minimize the impact on the environment, the climate, wherever our projects are being implemented. We have a charter in house. As per the charter, we proceed, and the process have got the checklists which help us to the extent possible in avoiding contamination of the areas where we have the camps, where we have the casting yards, where we have the stocking yards, where you have the workshops for the plant and equipment and machinery, etc. So thus we are with the same cause as of the broader picture for the government of India and for the whole of the world in ensuring the climate impact is focused and is addressed.
So let me understand a little more. When you're climate resilience, climate mitigating features are what you're focusing on. How is that monitored, especially when you're executing projects? Planning is one stage, but when you're actually executing and commissioning the projects, how do you measure that? And is it measured on a daily, monthly project stages? How is it measured, and how do you suppose there is a variance? How do you refix it?
Firstly, there is no scientifically adoptable formula or a tool to understand what is the exact climate change. This is so sensitive that one could understand the climate change or the impact of climate change only after it happens. So, in fact, if you could refer, we were speaking about the empirical data. So, generally, the empirical data and the projected data could have some logical reference, whereas climate change is one sensitive aspect that we understand its impact only after the climate change happens, and we note what is the volume of climate change that we could be estimated. It's not something what we could do before it is done. However, as you rightly mentioned, there is a mechanism to understand if we were to avoid further climate change impact, what all need to be done, and are we exactly on the same schedule, are we doing it in the same manner. Let's say your yard has to be only within this confined area, leaving a small gap, shoulders, and then doing it, or creating a moats so that the noise pollution will not cross the border, or the dust will not cross the border, or let's say the dust mitigation measures are undertaken, or the oil replacements etc are done timely so that they will not release smoke, and the disposal of used burnt oil will be done in a scientific manner. These are the things what you can voluntarily adopt, which we are adopting. Then there are the regulatory measures like PCB measures, etc. And of course, as I said, when Federal Bank has given us the loan at a very finer rate, appreciating our efforts in ensuring the environmental care, then we are also on the schedule of the checklist, which is part of the ESDD, and everything as per the checklist is being ensured.
And does the financial regulator also impose do periodic checks?
As of now, no, ma'am. As of now, no. So the lender itself is the regulator in a way. And why would lender take so much of interest? Because it has to channel more of the green finance. Unless it channels more of climate finance, it cannot claim its standing in this field, and it cannot in turn also mobilize more of the benign cost of funds for the same cause. And as we stand today, you are questioning about this, what is indirectly, what is the role shared by regulators. This question of yours is futuristic. Going forward, regulators also will have their own targets, which could be a divided, distributed targets from the government, or maybe from COP, the Conference of Parties itself. Then everyone will have the same target what you're speaking.
Today we are behind. The whole world is behind in whatever we have agreed upon. There is not enough finance. There is not enough speed. The climate is changing at a much more rapid pace than we have estimated. What do you think companies like you should do, and how sensitive are your employees to this kind of change? And is there a voluntary mechanism, or is it purely ticking the check boxes?
If I have to answer very honestly, it is top to bottom approach. So government should first ensure all of its projects will be climate friendly, nature friendly. Then whatever projects government is awarding have to be also in compliance with climate requirements. Then the topmost companies, the behemoths of the country, also have to focus more on the climate friendly projects. It is happening. Not that the biggies of the country, it could be Tata, Reliance, Adani, Godrej, DLF, all these names, whatever is the name. Of course, I have not left anything intentionally. Mahindra and Mahindra, all the groups, the top 100 groups are today very much conscious about climate friendly projects. They may have limitations in looking at the adaptation measure. In fact, we understood, ma'am, adaptation requires a lot of disturbance because something is going on very smoothly, except for one reason of climate friendliness. It's not so easy to redo a project of, let us say, 2.5 lakh crores investment running smoothly, providing employment to lakhs of people, contributing a lot of GDP to the country, etc. In the name of climate finance, in the name of adaptation measures, they may find it very, very challenging to look at. But then they are not oblivious of it. They are attending to these kind of adaptation measures also. It takes some time for even them to look at them. Now, coming to mid-sized to next level organizations like ours, which are aspiring to grow faster in this segment, you have put a responsibility, moral responsibility on us with your question that we should look at the climate finance projects whenever we are looking at a new project, either it is development or EPC, whatever. Now, if it is an EPC contract, in the name of climate finance, as a social responsible organization, you would, your question puts a responsibility that we should be competitive enough in ensuring not only the cost to the project but also the cost to the climate. That's what you spoke about in your question, and well taken. Certainly, we underwrite. We have been doing this, and employees impact. Employees' morale will be very high. It's such a sensitive thing. I've been driving, let us say, a mid-sized car. Suddenly, you make me drive a very small car. However good it is, however new it is, the morale will go down. It's not about the size what I'm speaking about. It's about the degree of the reputation, degree of the consciousness, degree of social responsibility, etc. An employee working for a company which is doing very good social responsible projects versus an employee in a company which is mired in let's say a lot of disturbances or allegations that they've spoiled the environment, they've spoiled so and so thing like that. So the morale of employee in the former example will be very high, very high. The productivity will be very high, and his desire to be with the company for a long tenure will be very high. When he stands out in the market, he influences everyone, stating, "We are this." So that begets the best of the quality of the employees to those organizations. There is a cycle. This cycle will not happen in a day, in a month, in a year. It happens over a period of time. But the benefits from adaptation and mitigation, which the companies are assuming, will definitely give them a fantastic payoff and payback in a shorter period than a very long period of any other long-term project.
What are the lowest hanging fruits in this segment? Is it, are we slow because there is not enough finance, or is it that we don't have enough trained manpower or knowledge about how things have to be done, or is it just that the client companies are not building enough into these projects?
There is a cycle. Now, if as a developer I have to invest 20% more to make an absolute climate friendly project, my pricing of my goods or services also has to be higher by the same 20% or slightly around 20%. Are my consumers, my clients, willing to pay this premium and facilitate my increased cost? Is the first question. Am I enjoying the required tax support from the government so that I will have a bit of resilience in my additional capex which is getting sunk into the project? Is second question. Third, is there awareness, consciousness in the ecosystem to give me the due appreciation. I'm saying appreciation in the brackets support for me to operate on par with other traditional projects so that I will not be left behind in the name of this climate change. If these three aspects are met, who should address them? I should address myself. You should address every person in the world should look at them, and every part of the cycle should adopt this requirement. Then it will set. Now, trained manpower, yes, as you rightly said, uh, from one aspect, the awareness of climate friendly projects, the awareness of the carbon footprint damages, the awareness of the 1.5 degree Celsius target is has not percolated below the topmost professionals like you and me. You are a media leader because you are interviewing the celebrities of the economic business world in the country. Therefore, you know. And also, you do a lot of research and you are inquiring with multiple authorities. But many of the top executives in many companies also are not aware of this target, this requirement. Unless the executive level, the CXO level people are taught, oriented, made to realize that everyone should work towards this goal, we can't think of the middle management or the lower, the field level and other managerial level officers, or even the ground level, field level workforce to understand and to assume this. So there has to be more of a training and orientation about this. I would say very wild thought. Government would bring out in most of the tenders of the government, there is one clause which states anti-bribery, anti-corruption, etc. Similarly, anti-climate activities will be considered, will be prohibited or prohibited. Every work has to be towards climate friendly, in with climate friendly orientation or approach. Like that, some condition could be included. In fact, in the West, as you know, most of the contracts or service SLAs, etc., of the likes of US, Iran, they have a condition stating all the employees of your company should be given a 16-hour training. Hours differ as per the contract agreements. Compulsory training on anti-corruption, on anti-bribery, and honest practices, good management practices, etc. So, smallest person who would be only an office boy, and the CXO, the CFO, CEO, MD, chairman, everyone undergoes a training. Now, when it is a compulsory training and everyone has to also undergo the training and take a small online test of 5 minutes, one or two points what goes unintentionally into your mind will definitely influence your thought process, and you will have a bit of consciousness towards cleanliness, climate friendly activities, and anti corruption, all of these things. Similar way, like our MHRD, the Ministry of HRD, could think of. In fact, you are working closely with the government bodies.
The whole purpose of this conversation was to raise an issue. In Urban Insights, what we do is raise the issues. There may not be easy solutions. In fact, there are no solutions in the foreseeable future. But we're racing towards a rise in temperatures. And this 2024 has been the hottest year ever. It has been declared now, which means that we have to move at a faster pace. And unless more of us bring this dialogue to mainstream, this change may not happen at the pace that we need to. Thank you so much for joining this conversation. This is only the beginning of a conversation. Would like you to keep participating with us. Thank you.